So you've gone through that customer discovery process, you've looked at the different competitors, identified any potential barriers, and now you're ready to continue to move forward. Determine how much funding that you need to help your business for those startup expenses, and then also as your business grows. There are different needs depending upon your company and how everything is structured. There are lots of options potentially out there. You can put your own money in to help fund the business and move it forward. You can visit with family and friends on that. One thing I always share with clients is to make sure that you get it in writing. Also, reach out to your bank or local lenders in the area and possibly access a small business loan, so an SBA guaranteed loan where the SBA guarantees a large portion of the loan, allowing lenders to make loans to higher risk startup ventures. There's also angels and venture capitalists. Sometimes the businesses are, potentially a good fit for the investors. The team's a good fit. The traction is there, so they're already making sales. They're making inroads in those markets, and they have the ability to scale rapidly and provide that high return that those investors are looking at. There are also other programs depending upon what space you're in. So tech companies could have the opportunity to go out and look at grants.gov to see, do a search for whatever their technology is and see what might be available with the different government agencies there. There's also the SBIR and STTR programs, so Small Business Innovation Research and Small Business Technology Transfer programs that I believe currently 11 of the federal agencies participate in those programs either through SBIR or STTR. Those are grants, non-dilutive equity that goes into small businesses. So it's not research for the sake of research. It is innovative technological development with the opportunity for commercialization. There are always those options out there that I cringe because most of the time it's good intentions and it's a way for them to move their business forward, and yet it can cause a lot of heartache and struggle for them as they move down the road. Some of those are financing with a credit card. Everybody has good intentions of, okay, I've got 0% for 12 months, I'm going to be able to pay that money back, no problem. You get 12 months down the road and you're like, oh, I just need another 12 months. So it starts a vicious cycle potentially. There are lots of legitimate banks and lenders online. There are also sites out there where, hey, you can get $25,000 today. No credit check, minimal paperwork. I would caution you to read the fine print on those. Usually it's a high daily compounding rate. They are withdrawing from your account every so many days. So it really ends up costing the small business owner, regardless of which industry that they're in, potentially a lot of money